Hey, good morning, everybody. It's Brian. Hope you're doing well today. It is Monday, the 30th of November, and we're here just to do a really quick update on the futures session. Just getting my other screens loaded up here, so that's why you see my hand moving around. So, coming off a holiday week, we're back into it. We've got a couple of weeks before things shut down again for Christmas and New Year's, but probably ample opportunity here over the next couple of weeks to see what's out there, look at some safe breakout trading opportunities, and see what the market provides to us. Let's go ahead and I guess a couple of things. Let me do this first. Place to start would be here with news. There's no news really today that would keep us out of the market, but do keep in mind as we get later into the week, we do have non-farm payroll. That's on Friday. Non-farm payroll reports come out on Friday, so that affects Canadian employment information, unemployment rate, but then also the U.S. unemployment and non-farm payroll. This is a big deal. This is pretty heavily watched, and could certainly be a catalyst for movement. So do watch that one. Tuesday and Wednesday, tomorrow and Wednesday, Mr. Powell is testifying about the CARES Act. So that also could be a big deal for us, one way or the other, right? I mean, no one knows which way it's going to go. We can all kind of guess, but anyway, but with that said, don't try to front run it. Let the market make its move, and then make your move based on what the market's doing, not what you think the market should do or you hope it should do or any of that nature, right? I can't stress that enough. All of my big mistakes in the past have been trying to front run something and then getting tied to my decision mentally, right? Getting tied to my decision, and then emotion rules the trade instead of quantifiable information that should be dictating what we do, right? So anyway, just for what it is, stuff coming up that could be market impactful. Just let the market do what the market's going to do. All right. With that said, what is the market going to do? Well, I don't know what the market's going to do, but I can tell you some different things that we can certainly watch and take advantage of. So let's do that. Let's pop over here. We're going to look at the three we always have up. We've got the S&P over here on the left side. We've got crude in the middle, and we've got gold down here on the bottom. The S&P is in an upward trend, although the 4-hour and the 30-minute are conflicting. So our 4-hour has a upward bias, but our 30-minute right now is conflicting. It's got a short bias. So we have conflicting biases on the S&P, which would tell us to, hey, let's stay away from the market. Let's not do anything with that. Now this will change. We've still got about half an hour before the actual regular trading hours begin. If we close up above 36.30, more than likely our moving average is going to cross up over that as well. But we need to see this close up higher here. So until that does, the BTX method is off the table, right? We're off the table because we've got conflicting market bias. So we can't do anything here until our market bias aligns. For those that are just looking at breakout trades, just straight breakouts, you could just do a straight breakout right here, call it 36.33. You can look for a break of that and see if we can run higher. If you want to be a little more conservative, you could look at 36.40 area, which is up here, and look for a break of that pretty much previous top, and see if we can push on beyond that. For me, I would say the safer bet is obviously what we always talk about, which is let the market give us the bias, confirm bias on multiple time frames, and then trade based on that confirmed bias. And if we don't have a confirmed bias, then just stay away from it. You don't have to do anything. You don't have to take an action. So keep that in mind. So for the BTX method, we're not here. We're going to stay on the sidelines. If you absolutely can't do that and you have to do something, you can come back over here. You can look for just a straight breakout you know, like I said before, right here, 16, I keep saying 16, 30, 36, maybe that's a sign of something to come, who knows? That'd be crazy. Anyway, you know, 36, 33, you know, or a straight breakout up here above 36.40. If you want like bounce trades, this 36.25, 36.24 area is held up pretty well for bounces. Might even go as low as 36.20. But anyway, there you have it. I would say, you know, smart money probably is going to stay on the sideline here. Crude, if we look here to the middle, crude is in an upward bias. 4-hour bias is certainly long. The 30-minute bias is just crossing over, and it's going back to the long side as well. I would be a little bit cautious here. I mean, we seem to be hitting this top, and it's rejecting off of this previous top over here from last week. But you know, so what we'd like to see is the market pull back, making a lower high and lower low, and then play a breakout of that previously closed lower high. So we'd like to see this pull back a little bit, and then you know, try to break higher on, you know, by following that current market bias. Gold is in a short bias. 4-hour is short, 30-minute is short as well. So for gold, we'd be looking at short trading opportunities. For us, we'd like to see it push higher, making higher lows and higher highs, higher lows, higher highs, and then play a breakout short if we can break back down below that previously closed lower high. So that's what we'd like to watch here with gold. So we'll see what happens there and how things really shake out. But we certainly would be looking for short on gold. All right, so there we have it. I think we've run through those trade ideas for gold. What does a short look like? I mentioned that, you know, lower highs or higher lows and higher highs, and breaking back down below that. If you're looking just for straight breakouts or bounces, you know, 1770 on gold would be your point. If we break below that, that'd be your potential just breakout short. If you're looking for bounces, you know, you could look up here at 1785, 1790 area for a bounce trade back short on gold following that current market bias. All right, so that is it for me for now, and you guys have a great day. If we have, you know, some tradable opportunities that meet up with what we had just talked about here, obviously we'll share those in the next